Welcome to Prime Perspectives, where Keith Galicia guides you to the financial finish line. As a certified financial planner practitioner, he covers all topics in financial planning. Join him each episode to gain insights and strategies, helping you pursue your financial goals together.
Welcome to Prime Perspective Podcast, where we look to get you to the financial finish line with any of your financial goals, whether it's retirement planning, estate planning, tax planning, or maybe a personal goal for yourself, which could even be either buying a home or moving in from your existing home that you have now into a larger home. And so today we are very lucky to have our guest. His name is Jimmy Lopez. He works for the Mortage House. Thank you, Jimmy, for showing up.
Thank you, Keith, for having me. It's an honor to be on your podcast. We've been talking about doing this for a while, so I'm glad that it's finally here.
Yeah, I'm glad we finally were able to connect. Let's do the audience a favor and just tell them a little bit about your background and how you became a mortgage lender.
Okay. Yes, I've been doing loans for 20 years. Be 20 years on October 1st was my first day at Countrywide Home Loans. I became a lender. I was finishing up Cal State. I have a degree in finance, and my goal was to become a financial planner like yourself and help people with their finances. And I had a friend back in 2004. I said, "Hey, maybe you should become a loan officer. I'm doing it. It's a great job. I think you would be great at it." And after a couple times that he asked me, I decided to, why not? Let me give it a shot. I thought it would look good on my resume to have background in finance and mortgages. So I started that and lasted about 5 years with Countrywide. And in 2010, I transferred to the mortgage house where I'm at, and I've been here ever since.
I dig it. Was there something that inspired you? So it sounds like the service industry, which is what we do, really kind of gave you that motivation to move into the mortgage industry. But was there anything specific that inspired you to pursue that career?
Not really. I used to enjoy talking to people. I enjoy numbers. I went to school for that. So I wanted to help people with their finances, and I never planned on being a mortgage loan officer. But once I started helping families and seeing how rewarding it is to help them get into a house and how thankful they were. And it's how I started creating those relationships and becoming friends with most of my clients. It's a unique job and I enjoy it. And I started and I never left. So that's why I'm here.
Yeah. In our industry and yours as well, we know that buying a mortgage is the largest purchase or buying a house is the largest purchase that anybody will make. And if you can facilitate that, make it a smooth transaction and be present when they're ready to receive those keys and walk through the threshold of their first home or even their second or their 10th home. Right? And it's like, it's got to be rewarding to be able to facilitate that largest purchase that somebody may ever make. So yeah. Is there a specific part of lending that you specialize in? Is it more of the personal or the commercial or what is it that you really, what's your preference? What do you like to?
Well, I only do residential mortgages. I mostly work with first-time homebuyer programs. So getting people ready to buy their first home, and it's the most rewarding. I have a lot of clients that are investors and have rentals and do flips. But I specialize in first-time home buyers. It's a neat relationship because when you start talking to a first-time home buyer, most of the time they don't want to give you information. Most of the time they're afraid that they're going to come in and not be ready to purchase a home, so they don't want to hear it, hear the rejection. But it's establishing the relationship to let them know, look, it's an easy process. Let's just find out where you stand, and once they understand that, hey, you do have their best interest, they kind of let their guard down and they open up and we get them into a position where they can buy a house.
Exactly. I always tell people, if you don't know me, like me, or trust me, you're not going to do business with me, right?
No,
So,
no.
and so it's important that people do feel that trust. And, you being 20 years experience, going through the peaks and valleys of the economy and home lending, and, you can take that wisdom that you've been able to accumulate over the last 20 years and, just give them the advice, give them your perspective on things instead of just trying to sell them something, right? Just to
Absolutely.
put them into the house. So, okay. So, you said first time home buyers are your niche, right? And,
Correct.
so let's talk to the first time home buyer. I'm a first time home buyer. And I've never filled out an application before. What does that typical mortgage application look like?
It is pretty basic. What we're going to do is just take your information. It's not a long process. We're going to see where you have worked for the last 2 years, what kind of income you've made, what kind of income you're receiving right now. And then we're going to run your credit. And most people, that is the biggest opposition that I have is, oh, I don't want to run my credit. We can do a soft credit where soft credit pull, not a hard inquiry, so it doesn't affect your credit score. And all we want to find out is what your income is that we can use, what your debt is, what your credit score is. And that way we can tell you what kind of programs are available to you, how much you can qualify for. And then once we do that, you'll know the monthly payment is, how much money you need for that property. And it helps you. It just tells you where you stand right now, what you can afford. And honestly, that process takes about 20, 30 minutes at most. So it's a pretty basic process. And we can do that over the phone. We can do that face to face. But it is the first step that you need to do. And most people actually do it back. Most people want to come talk to me. They don't want to come up and talk about finances and payments and how much debt they have. And they don't want to talk to have somebody look at their liabilities. But what they do, what most people do is see a house, they're driving down the street and see a for sale sign. They look at the house and say, oh my gosh, we love it. And they say, I want to buy this house. And they'll talk to the realtor and they'll say, hey, well, have you been pre-approved? And they say no. And they do it backwards. They fall in love with the house before they know if they can afford it or what the payment that mortgage has. So that's okay. That's what we're here for. But most people do it backwards, do it the right way. Come see me, come see a professional that will tell you what you qualify for, what the payment is, and then go look at houses in that price range where you want to be at. And it's a lot smoother when you do it that way.
Oh, exactly. Exactly. Okay. So I filled out the application. You pulled my credit. You know what my income looks like. What are the key factors that a lender is going to consider when approving a mortgage application? Debt to income ratios, payment to income ratios, credit history, all of the above. What are their top factors that a lender is going to look at when they say green check mark approved?
So it's all of the above. Like you said, buying a house, getting a mortgage is unlike any other loan. The second biggest purchase that most of us do is a vehicle. And you can, go down to Toyota and buy a brand new car here by this afternoon. By the end of the day, we would have a brand new car in the garage. Mortgage is different. We will verify your credit score. Credit score is the most important. The higher the credit score, the more options you're going to have. Yes, the better the rate it's going to be, but the more options you're going to have. So we look at your credit score. That's going to determine what programs you have. Based on that program, we're going to determine what your rate is, and the rate's going to determine what your monthly payment is. So when we're looking at your credit score, yes, we're going to look at your debt, but what's more valuable to us is your credit score and then how much debt you have. So you could have a perfect credit score, let's say 800 credit score. But if you have a lot of debt, then you might not qualify because you have too much debt. So it's a combination of everything to where You can have a 620 credit score, and guess what? I can qualify you for a house if you don't have a lot of debt. So don't think that you have to have perfect credit or no debt. It's a combination of everything. So the bank, the underwriters are looking at that. Okay, we're going to focus on your credit, your debt, and then your incomes, and determine what your debt to income ratio is. And that's what tells us, hey, with your income and your debt that you have, you qualify for X amount. Okay, so we look at everything.
Yeah, and probably towards the end, I'd like to probably get into maybe some of those specific numbers. But I do have which I'm sure our listeners really appreciate that perspective there. Uh, but I do have another question here. And when you started in 2004, 20 years later, 2024, technology, DocuSign, Zoom, whatever it is. And really, the game has changed probably a lot since COVID, right? As all of these extra
Right.
technological enhancements that allow our jobs to do easy, to be easier. I have clients in Florida and they need a document. We use DocuSign or anything like that. And it's something like that overnight. Where pre-COVID, I was probably going to mail paperwork to them. They were going to receive it, overnight it back to me. It was just this lengthy process. How has the mortgage approval process changed in recent years?
It's faster. And I think before COVID, we had, um, to an extent, we had the ability to email, DocuSign, scan, but COVID forced us to really be able to or use that because we couldn't do a lot of face to face. And so it makes it easier for the client. Back in 2004, 99% of my appointments were face to face appointments. So you would have to come in, bring your paperwork, your tax returns, W-2s, your pay stubs, and I would have to make a copy of it. And that would require you to either miss work or come after work when you're tired. A lot of 5, 6, 7 o'clock appointments or weekend appointments. Maybe you forget something, guess what? You have to drive home and come back and do it all over again. Now with this technology that we have now, it's pretty simple. I mean, you can send me everything that we need to get you pre-qualified from your phone. And it makes it easier on me, but it makes it easier on the client. They don't have to miss work. They have to make multiple trips if they forgot a bank statement or a pay stub. So it's just easier for everybody. And it's changed a lot. I would say most of the time I'm doing everything online, very few face-to-face, which, it's good for everybody because it's faster and you waste less time, but the relationship's not quite there. A lot of times I don't recognize people or I might be, standing next to you. I don't know who you are because all I have is a driver's license picture from you from 5 years ago. So it's a little bit different, but it definitely helps and it makes it faster and makes the approvals more streamlined to where you can go out there and buy a house immediately.
Yeah, I mean, I can imagine, right? Let's say I'm a truck driver and, and you needed a document from me, but maybe I'm on the road for this whole week. Well, we'd have to wait. That pushes the whole process back another week or so just to be able to provide you one document where maybe that person could get on their phone, pull that document, email it or scan it to you and keeps the process efficient and rolling. So yeah, no, I think that's, COVID was an interesting time, but I think there was a lot of good and progress that's come out of that. So yeah, super interesting. Let's get into some market insights, right? And if people haven't figured out yet, rates are a little higher than they were back in 2020, 2021. How would you describe the current state of the mortgage industry right now?
The rates are getting lower. Let's hope, they were hovering above the 7% range now, and they're in the 6% range. And by a lot of people, a lot of experts are predicting that the rates will go down the beginning of next year. And it's great. The lower the rate, the lower the payment, the more you can afford. But I would tell you this, that don't worry about the rate because we cannot control. So don't let that be the determining factor. whether you're going to buy a house right now or not. Um, and I would say that as soon as the rates go down, a lot of people that are on the phone are going to come back into the housing market and purchase. So you're going to have more competition. You can control what they are. You can control the house prices. Don't think a lot of people believe that they're going to drop, so they're going to wait till they drop. Guess what? If they drop, which I don't believe they are, but if it does drop, and I'm talking about the sales price, you're going to have a lot more competition. So rates are coming down, and we're hoping for a couple more interest rate cuts, but hopefully by next year. But we don't know what they are, but they are a little bit better than at the peak of the height of the rates.
Yeah. No, I think it's kind of like everything else, right? If just because, you think you're going to be sitting on the sidelines, there's a lot of other people that feel the same way. And you can only control what you can control. And if Bob and Tom and Susie and Harry decide to move, towards a house that might be something that you like, well, that creates more demand, less supply. And now Economics 101 says, hey, when you have more demand and less supply, the supply of that goods could potentially go up. And, that might be the case. I completely agree with you on that. When we've talked about this, right? In every interest rate environment, whether it's a lower interest rate environment or a high interest rate environment, certain products are more popular than the others. Sometimes you might have a type of loan that has sat on the sidelines and you haven't even discussed it in a couple of years. And now maybe we're in an elevated interest rate environment. And maybe that might be a conversation you're having now. Is there any type of loan or mortgage product that you would say has become more popular in the last couple of years ago with respect to elevated interest rates?
Yes, just a couple. So the higher the rates, the higher the payments, the higher the sales price, people need more help. So down payment assistance programs that helps you to come in with less money out of pocket. That's very popular. And also the 2-1 buy down. So 2-1 buy down, what does that mean? If the rate's at 7%, where the 2-1 buy down means that for the first 24 months, for the first 2 years, your rate's going to be lower. So if the rate's at 7, the first 12 months, you'll have the rate at 5%. The second year, months 13 through the 24th, will be at 6%. So that's your 2-1 buy down. But it does come at an extra cost. So what you're doing is buying the interest rate for those first 2 years. And a big misconception, I'm going to get a lot of clients over the last 2 years say, hey, that's the program I want. I'm like, okay, well, that's great. And we can offer that. But nothing's just free. So it's an extra cost that somebody has to pay. And yes, you can have the seller, you can negotiate for the seller to pay for that. But it takes some negotiation and finding the right seller. So it's not just something that happened, but that is a program that became very popular very fast with the rates being so high over the last 24 months. And it came back. I mean, it's always been there, but it came back. And I think every single, including ourselves, every single mortgage company, every single mortgage professional was advertising those because that's where that's the product that people wanted. They wanted the lower rate just to get into the house.
I could see the benefit of that, right? I mean, you have somebody maybe that's just starting off in a career and they know that there's a certain trajectory, maybe an advancement in income that they might see. So, okay, let's get into the house. Let's figure out our cash flow. Let's make sure that this is a house that we can afford. But hey, I know that I'm going to I'm on a management trajectory in the next couple of years or so. Or my husband might just end up finishing school and then we'll have dual. But now we're going to be able to afford more house or something like that. So let's take advantage of the low supply now, be able to afford the house that we can get into. And then we know that our circumstances are only going to get better the next couple of years. And this is the way for them to be able to take care of that, living the dream, which is owning their first home.
Absolutely. Yeah. And bottom line is, any program that can, in my opinion, any program that can help you get into the house that you like, it's a great program. So see what the options are. A lot of people would come just for that program to talk about that program, and then I would present them that option and other options, and they found out, hey, maybe this is a better option. So, but any program that helps you get into a house, use it. I mean, it's all, the bottom line is what we're trying to do is help you get into the house that you like and that you can afford.
So let's
Mhm.
let's look at this, right? I mean, obviously
Yeah.
we know that that's not the only program out there.
Mhm.
A lot of options when it comes to assisting your clients with getting into their homes. Um, what advice, let's say you're talking to your nephew, right? First time home buyer, has established a job for the last couple years, making good income, just got married, all of the above. What advice would you give him as a first time home buyer to secure a mortgage?
So the first thing is come see your professional. Okay. I would love for it to be me, come see me, but talk to a mortgage professional. There's a lot of misinformation out there, and you might qualify for a house that you like right now. The way your credit stands, the way your income is, you might be able to qualify for the perfect home for you right now. If you don't qualify for something that you like, or if you say, hey, Jimmy, this is great that I qualify for a $300,000 mortgage, but I really want to get into a $400,000 mortgage. Okay. Well, then this is what you need to do to get to this ideal mortgage for you. Great. Now you know exactly where you stand. So that is my number one advice. Please go talk to somebody. Know where you stand. You might be ready to buy a house right now. You might be able to afford that house right now, and you don't have to wait for anything. The other thing is, if you don't want to come in and or you're not ready to have a sit down with somebody, is pay your debt off. Okay. As simple as making your payments on time. Okay. If that's all you can afford, then send a minimum payment. But if you can afford a little bit more, I'd rather you be paying down your credit card debt than, for example, let's say you have $5,000 in your bank account. You're not earning 25%. I believe the national average on the credit card is like 19.99 right now. So use that money towards paying off your debt. Just do yourself a favor. At least make the minimum payments, but if you can pay more, pay your credit card debt. So those would be my two tips for them.
Absolutely, absolutely. And I kind of do the same thing, right? As a financial planner, somebody might come in and say, "Hey, Keith, my goal is to buy a house in 5 years." We'll analyze their cash flow. I'll figure out, hey, what do you owe on your credit cards? We figure out a plan to get those down as soon as possible. So that way you can free up some of that cash flow for them to be able to afford that mortgage payment, maybe whether it's 3, 5, 7 years from now. And also create that extra little nest egg for that first time purchase. Yeah, no,
Absolutely.
I think that's a great tool, or a great way to think about it. Um, which kind of leads me to the other side of that, right? So you're still talking to your nephew here, and maybe now he's gotten approved. In the last 20 years, if you were gonna invoke some of that wisdom to that nephew and say, hey, what and he would ask you this question: what common mistakes do you see home buyers make during the process? Or he's approved, he's either looking for a home or he's in escrow. What are those mistakes you would say, hey, don't do this? What does that look like to you?
Oh, please do not go buy anything. Do not open up any new accounts. Do not go buy your new furniture or your, big screen TV. Wait until you have the keys in your hands. Wait until the transaction is closed. You're qualified. You're pre-approved based on your debt that you have right now. So for some reason, you go and apply for that new furniture because actually furniture stores having a 3-day sale. Now you have a brand new payment. And a lot of clients believe that we're not gonna find out. And every bank will do what's called a soft credit pull at the end of or right before they fund the loan, right before the bank sends the money to the escrow company so they can close that day or the following day. And if you have more debt or new inquiries, new debts that we don't have in your approval, guess what? You might not be approved with the new debt. So please do not go buy anything else. Wait until you have the keys in your hands. Wait until I tell you Go ahead. Go and buy everything you want, but please don't open anything while you're in escrow. And if for some reason you have to, you tell your mortgage professional, hey, Jimmy, I had to, my car broke down and I had to, repair it or buy new tires and I had to put it on my credit card. Okay. I'd rather, be proactive than reactive at the end when, we're thinking you're going to get keys at 4 p.m. and I have to call you and say, hey, we used to have a new bill of $1,000 and $200 monthly payment. What's going on? So please don't buy anything. Don't give me a heart attack.
Right. Okay. So let's get to maybe that maybe one of the last questions for that nephew there. So, outside of your wisdom that you've invoked to your nephew right there, any tips or programs that are available right now to assist a home buyer in making that purchase? Anything from the state? What's out there that somebody could?
Yeah. So first-time homebuyer programs, CalHFA, California Housing Finance Agency, has a great down payment assistance program. It helps you with your down payment or closing costs. So what they do is give you a second loan where you don't have to make any payments on that second loan. The rate on the second loan is 1%. So a lot of times people say, well, it's a second loan. What's the big benefit? And nobody's going to give you 3.5%. So second loan with no monthly payment on it. And that helps you get into the house with less money in the pocket. So for example, if you have a $300,000 home, your down payment is 3.5%. Your closing costs are going to be on average 3%. Now you're spending $19,000 to get into this house. So that's where you need to get into this house. So for a lot of people, especially for some home buyers, that's not something they can save, or that's not something that they think is feasible. They give up. And if they know that there's programs like this available to them, they might say, okay, well, if I can use this program and having to come out of pocket, $19,000, $20,000 in the pocket, I just need to have or less than $10,000 out of my pocket. Then they can say, okay, that's something I can do because you know what? I have $4,000 in my bank account right now. So a few $1,000s more is not, is not impossible. So know what's out there. But yeah, that's a great program. That's something that, if you're a first-time home buyer and in California, you're a first-time home buyer, but you have not bought a home in the last 3 years. So let's say, Keith, you bought a home 2018 and you sold it in 2020. Guess what? You're a first-time home buyer right now.
Really?
So yeah. So take advantage of this program. So they're to help you get into the house easier.
That's good to know. I didn't know. I thought it was kind of like once you've already bought your house, then you're not a first-time more. So actually, that's good. Some I seriously learned today. Well, good. Well, let's kind of wrap this up with maybe some of the rules of thumb here. When it comes to, we've talked about percentages, right? We talked about percentages. We talked about debt. We talked about payment. What is the rule of thumb for payment to income, for debt to income? I think those are the biggest percentages that we need to look at.
So most banks will want your debt to income to be at 43%. So your monthly payment be at 43% over your gross income. And so, so for example, take somebody who makes $10,000 a month, your monthly payment cannot exceed $4,300. Okay. There are exceptions. FHA guidelines are pretty lenient to where your monthly payment, we can take it up to 45% if your credit score is 700 credit score. It would give us an approval. Bottom line is that's great that we can approve you for that, but it's where do you feel comfortable? Okay, what is a monthly payment that you feel comfortable? Because I might tell you, hey, you qualify for this amount, but you might say, Jimmy, I don't feel comfortable the way I'm spending my money. I want to have a payment this amount. So it comes back to if you don't remember anything that we said, is meet with somebody, talk to them and see what the right payment is for you. The bank isn't tell you qualify up to 43% to 45% debt to income, but that might be too much for you, or if that's not enough, then we can say, okay, well, maybe put a bigger down payment so you can qualify for that mortgage, or if it's too much, then it's just, hey, maybe I just want a payment of $2,000 a month. Okay, this is the type of mortgage that you need, and this is the sales price that you need to stay. under so you can have that payment. So biggest thing is you don't know until you know. So know where you stand and buy a house sooner than later. If most people will tell you right now that it's a bad time to buy, they believe it is a bad time to buy. It's price high, rates high. My answer, and I learned this a long time ago. My answer as far as when the right time to buy is, if you buying to as your primary home, the right time is whenever you can afford the house. And if you like the house, then today's the right time to buy. And that's going to be my answer 5 years ago and 5 years from now. Okay. If you like the house and you can afford that house, you're going to be happy in the house. Okay. You're going to love that. You're going to make it your own. You're going to paint it. So start that right now. Okay. And it doesn't matter if the rates are going to go up or down next year. You can't control it. We don't know if they are or not. But if you like the house and you can afford that payment, do it right.
So yeah, agreed. Right.
Mhm.
And so I just for my clarification, so that 43%, is that principal and interest, or is that all in principal, interest, tax, and taxes and insurance too?
So PITI, principal and interest, taxes and insurance. That property has an association fee, everything, the full monthly payment for
All in, whatever you have to show up to check.
Mhm.
Okay. And then
Correct.
finally, so that's payment to income. What about debt to income? The percentages there on that, you may
Great question.
bring it. Let's just bring it all.
Yeah. And it gets a little bit confusing for people. So what he's talking about, your payment to income, is what we're talking about, the full payment being around 43 or 45%. Your total debt, though, you have a car payment, you have credit card. Okay. Most banks are going to keep you at 49.99%. FHA allows you to be up to 56%. And so you're looking at maybe going up to 56% to where we can approve you for that. But is that something you can do? The bank says you can, but it's something that we need to have that conversation to where is this something you feel comfortable being at that monthly payment when you have your credit cards and your car payments to pay on top of your monthly. So,
Well, Jimmy, like I know owning several houses and you being in the financial services industry, I've learned a lot today. And so I really appreciate you taking the time and helping myself and also the audience really try to get a grasp around what it looks like from the eyes of somebody that's been 20 years, a mortgage lender that's been, over 20 years in the business. Are there any other resources that somebody could go to dig a little deeper on some of those programs out there? How can somebody find you? Do you have any social media? Tell me a little bit about, if somebody wanted to research, some of those conversations you'd have, dig a little deeper with you, how do they get a hold of you?
just contact me. My cell phone's always a great way to do it, but I'm on Facebook, Jimmy Lopez Loan Officer. You can Google Jimmy Lopez Bakersfield, California, and the first two hits you will get is my link to my website and my Facebook account. And I'm pretty active there, but feel free to give me a call. Feel free to shoot me a text. I'm sure Keith will give you, we'll put the number, our cell phone number there somewhere, but yeah, just give me a call, reach out and contact me.
Go ahead and provide it now.
Spell it out, 661-213-6111. Call me, text me, random question. If you want to know what the payment is of a house that you saw while you were driving down the street or while you were walking your dog, that's what I'm here for. And if you want to know more information about the programs, I can send you the information. I can send you the websites. I can talk to you more about requirements, what credit scores you need. That's what I'm here for. Use me. I can be your source for any of those questions.
Great. So yeah, look him up on Facebook, on the website there. Go ahead and feel free to Google him. I think that you'll come out of that conversation with a lot more peace of mind that may be going into it. So, well, thanks a lot, Jimmy, for your time.
Thank you. Thank you so much.
Really appreciated the conversation today. Hoping that the audience feels the same way. And everybody else, stay tuned for other episodes, Prime Perspective podcast, to help you get to the finish line with your financial goals. Thank you very much. Take care.
Thank you.
Keith Galicia is a registered representative with and securities and advisory services offered through LPL Financial, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.
Jimmy Lopez is not affiliated with or endorsed by LPL Financial and Prime Portfolio Planning.